Let's get you caught up on some of the companies that have given updates, including Westpac delivering a third quarter trading update, posting an unaudited net profit of $1.8 billion, which was up 6% on the first half quarterly average. Excluding notable items, unaudited profit rose 2% to $1.8 billion. The bank reporting a net interest margin of 1.92%, up 3 basis points in the first half. Westpac seeing household deposit growth of 3% and housing loan growth of 8%. Suncorp has posted a profit of $1.2 billion for the financial year 2024, up 11.8% from the previous year. The result has been lifted by stronger returns on investments due to higher interest rates. The insurer will pay a dividend of 78 cents per share for the full year. It expects gross written premiums in the mid to high single digits for the next year. As the reinsurance market stabilises and inflationary pressures ease, Suncorp reported a 14% growth in its written premiums for full year 24. And commenting on the challenging market for insurance companies in the last few years, CEO Steve Johnson says the earnings have rebounded to where they were previously. We've also heard from Bluescope Steel reporting earnings of $1.34 billion for the full year. That's down from the previous financial year. Net cash also down to $364 million. Shareholders will receive a fully franked dividend of 30 cents per share, and Bluescope has also announced a $270 million share buyback over the next 12 months. Bluescope also anticipating challenging conditions on its key markets for full year 25, and notably pointing to low Asian steel spreads, which it says will negatively impact steel prices. Lend-Lease has reported after-tax losses of $1.5 billion for the financial year from a loss of $232 million from full year 23. The loss coming after the group recognised impairments charges and due to lower investment property valuation in the investment segment. It will pay a final dividend of 9.5 cents per share. CEO Tony Lombardo saying the results reflect a challenging business condition and the early actions of their refreshed strategy. He's further added that the company is prioritising strengthening its balance sheet. Earnings per security expected to come in at 54 to 62 cents for full year 25. Fuel retailer and refiner Ampol reporting a drop in its half-year profit and cutting its dividend. Ampol attributing the result to weak refining margins at its Lytton refinery in Queensland and weaker pricing of its products. Net profit after tax from continuing operations coming in at $233.6 million on a replacement cost basis for the 6 months to the end of June. That was compared with $329.6 million a year ago. Its convenience retail operations delivered a profit increase of almost 5%, while its fuels and infrastructure business saw a 26% drop in profit for the half year. Ampol declaring an interim dividend of 60 cents a share. A2 Milk posting an 8% increase in full year profit of 167.6 million New Zealand dollars, which was in line with analyst expectations, but it's warned of a challenging China market. It saw revenue growth of 5.2%, which came in at 1.67 billion Kiwi dollars. A2 Milk forecasting mid-single-digit revenue growth in full year 25 and a profit margin to be similar to the previous year, with growth affected by infant formula milk supply constraints, which the company says are expected to be resolved in the first half. The company's top money-making segment, China and the rest of Asia, recording revenue of $1.14 billion for the year to the end of June, up 14%. And it says it expects further market value decline in the China market in full year 25. We knew that they were going to come under pressure, these shares, because they were falling in New Zealand, and they're down 16.5% in Australian trade on that result. Financial technology platform Iress posting a 51% gain in first half earnings to $67 million. Iress also saying it strengthened its balance sheet through the sale of non-strategic assets. As a result, its full year 24 guidance has been upgraded to the $126 to $132 million range, a 9% gain from May when adjusted for asset sales. CEO Marcus Price saying the company plans to reinstate a final dividend for this financial year. And the bathroom and plumbing products company Reece seeing its net profit after tax rise 8%, or by 8% I should say, to $419.2 million. It booked sales revenue of $9.1 billion, which was up 3% on full year 23. Revenue marginally lower in the ANZ region as it was impacted by a softer housing market, whereas in the US region, sales revenue increased by 3%. The company expecting near-term challenges to remain in both regions, and it's declared a final fully franked dividend of 17.75 cents, taking the full year payout to 25.75 cents, a slight increase on last year. Reece shares coming under pressure. Media has reported a 3% drop in first half revenue to $288.3 million, which it says is due to exit and renegotiation of contracts, as well as short-term market share loss. Underlying profit at Media fell 11% in the period to $18.2 million, while statutory profit was down 10% to $5.8 million. An interim dividend of 1.75 cents per share fully franked has been declared, which is a payout ratio of 51%. And we are seeing shares rise 6.5%. Well, one of the best performers on the market today is the audiovisual technology firm Audinate. It's posted record full-year gross profit of $44.5 million US, which was a gain of 33.2%. Revenue increased by more than 28% to $60 million US, and the 31% rise in Aussie dollar revenue to $91.5 million, which is aided by Aussie US dollar currency impacts. Net profit before tax coming in at $12.1 million, which was up $1.4 million from full year 23. And shares, as I mentioned, having a great day, up more than 10%. A GPT Group has reported a net loss of $249.4 million for the first half of the year. It expects to deliver 2024 FFO of 32 cents and a distribution of 24 cents per share. Nuix, meanwhile, reporting an annualised contract value of $211.5 million for the full year and expects the metric to grow by 15% in full year 25. GWA Group has reported revenue of $13.5 million from its ordinary activities, which was a gain of 0.4%, and shareholders will receive a dividend of 8 cents per share.